Now, South Africa has narrowly escaped a technical recession. In the second quarter, the economy eked out growth of 0.4%, following a contraction of 0.1% in the first quarter. The finance, real estate and business services industries are largely responsible for the current uptick. And Maarten Ackerman, who's chief economist at Citadel, joins us with his assessment of this print. Maarten, thank you for your time. Good afternoon.
Good afternoon.
All right, Maarten, 0.4%. Is this something to maybe write home about?
I think the only positive about that is that, it isn't a negative quarter. And on the back of our first quarter, which was, call it flat, almost negative, technically we're not in a recession. But that's probably where it stops. Because, a 0.4% growth rate, given our growth in the population around 1.5, that explains the story. So the economy is just not able to add enough goods and services to beat the growth in the population. And as long as that's the case, we're going to sit with high unemployment that results in more social grants and the likes. So that's a number for the quarter. If we just look at the number for the last year, so the last 12 months, that number is 0.3. And I think in that, there's not a lot to celebrate, unfortunately, at this point in time.
I will tell you, Maarten, I'm a little bit surprised by this number and how low it is, and maybe for two reasons. In that second quarter, we first would have seen, a falling off of load shedding. So much less load shedding. We also would have seen the election come and go, which also seemed to have gone well. This has not translated to growth, and I'm not sure what to make of that.
Yeah, so keep in mind that the GDP numbers are backward looking. So the sentiment that we are currently experiencing, if you look at the South African asset classes, just how well the JSE is doing, our bond market, the rand, that is still on the back of the election outcome and in the hope that the new government is going to remove some of the hurdles that are keeping growth under pressure. So if we can succeed in doing that, you hopefully will see the results going forward. But I agree with no load shedding. Well, in that numbers today, I think electricity generation was up very strongly. It was about a 3% growth for the quarter. So that is coming through. But we need more of the other sectors to kick in as well and record positive growth, what I always call the job creating sectors. Something like mining, which is still printing a negative number. And that will eventually add to more sustainable and high economic growth.
Speaking about, these job-creating sectors, I noticed that actually what did also come through here were more services-based sectors. And we know that traditionally those aren't great employers. Agriculture, Maarten, pulling back so much from the first quarter there. It really is, like you're saying, just these job-creating sectors not being able to perform.
Yeah, agriculture is a very volatile sector. We know that. You can have double digits in the first quarter and then a decline in the next quarter. But it is important from job creation. It's less than 2% of the economy, but it creates a lot of jobs. You can add to that, like I've already said, mining, manufacturing, and construction. At least mining and manufacturing and construction had a positive quarter. But, back to the positive sentiment that we currently see in terms of the markets, I think the important point is that this economy, if you look at that number, the real economy is still not experiencing the hope that the government of national unity might bring to the South African economy. So what we are looking for is removing those hurdles. We know them. We've talked about them many times before. Fortunately, electricity is being addressed, it seems. But you can add to that still, the logistical issues that we are dealing with, the ports that's still under pressure, the ease of doing business, that's still quite a challenge. And I think the urgency to address that from this government will then hopefully result in better growth going forward.
Let's also touch on household consumption here. That's a big part of South Africa's economy. That one up just 1.4%, I think, quarter on quarter. South African consumer obviously under pressure. We saw interest rates, of course, still high, but no more increases there, Maarten. Did this at all, help in household resilience? Or is this number actually in the doldrums?
Yeah, I think, we were very concerned about the household sector. We're a consumer-based economy. It means that more than 60% of the economy is still driven by what the consumers are doing. We had three very, very weak quarters before the last print, the 1.4 that you just referred to. So it is, promising to see that the household sector is, despite all the challenges that we face, um, still able to actually add to the economy and to spend. If you look at the different categories, it was very broad-based. It wasn't anything specific, it was across the board. So hopefully, we are seeing a lot of headlines of petrol, fuel prices coming down. Inflation is moving in the right direction. On the back of that, we're probably going to see the first rate cut. So at least a lot of the headwinds that the consumer's been dealing with might start to change into tailwinds, and this is what the economy needs to actually have better growth going forward.
And then let's touch on gross to fixed capital formation. This is one where we're just not quite getting it right. So when we see the budget coming out in February, we often hear of this big amount that's been also, allocated to infrastructure, Maarten. But then we get these GDP figures, and it's just like, well, where's that money? Is it coming? Where is it? I'm keen just to get your thoughts on that one.
Yeah, that number is so important. That's an indication of how much public and private sector are willing to reinvest back into the economy. That number for the last decade went from close to 20% to less than 13%. We can't build an economy if we don't invest in the economy. So that number needs to turn around and get back to 25% before we're going to see sustainable growth. We need to rebuild the roads, the rails, the ports, and the likes. So we had a couple of good quarters over 2022, first part of 2023. A lot of that's been solar, and the solar boom that we've seen, that is obviously now coming to an end because the tax incentives are almost done. So part of the decline that we've seen over the last 3 quarters with negative numbers from fixed capital formation is coming off a high base of solar. But you're 100% right. What we need to see there is a return to much higher investments. Your reference to the infrastructure boom and some of the budget items, on the ground, I think we're getting closer. There's been a couple of hurdles preventing that. It seems like some of those in the pipeline are going to be rolled out quite soon. So my hope is really that we are going to see that ending up in those numbers, and that we can get back to the positive trend we've seen as part of the solar boom. Because like I've said, that is definitely the first number that we need to see before we can start talking about 2.5% plus economic growth.
Then, Maarten, before I let you go, an argument that I constantly see economists having in South Africa: are we entertaining a period of austerity here that is pushing us back, keeping our economy from meaningful growth?
Yeah, you say, in terms of our monetary policy and interest rates, it is a fight against inflation. I think we are winning that as we speak. There's a huge debate about if we cut rates very quickly, will it really get the economy going? And I think the reason for that is the structural issues. So yes, obviously, making cost of capital cheaper will add, will make it easier. Dropping interest rates for consumers will stimulate demand. But that's not the only thing that's keeping our economy from much higher growth. I think the starting point is the structural issues. Even if you make interest rates much lower, if you still have issues in the ports to get our goods in and out of the country, low interest rates are not going to help. It's the same with the consumers. If we can't create more jobs, low interest rates are not going to help. So the high interest rates are definitely there to fight the inflation battle, which we are winning. But we are going to get this economy much further addressing those structural issues rather than just cutting rates to much lower levels.
Well, Maarten, it's been a pleasure hearing from you. Thank you so much for taking us through this print this afternoon. That was Maarten Ackerman, Chief Economist at Citadel.